Hey everyone, Joe here, and today let's talk about how to set up your small business to be financially healthy from the viewpoint of viewing yourself as an employee of the business. Now, this is a 5-part series. By the end of the series, you will know what areas you need to work on in order to get your business finances in order and ensure that you are starting to become in control of your money rather than having your money control you. So back in part 1, we talked about bank accounts and that you should have a separate bank account for your business. In part 2, we talked about checking in on your money mindset in relation to how you handle your business finances and uncovering your money personality as well, because your money personality profile gives you some invaluable insights into how you do money. In part 3, we talked about how with a few simple adjustments, you can start to manage your money. You can even out the highs and the lows in your cash flow. Today, in episode 4, we're talking about viewing and paying yourself like an employee. And in the last session, we'll be looking at ensuring you keep your emphasis on the holy grail for small business owners, which is profit. But before we get into all this content, be sure to hit the like button and subscribe. Send me a message. Also, if there is a topic around business finances and money or money mindset that you'd like to hear about, I'd love to know, and I can make sure that I create something for you. Now, getting back to the topic in hand of viewing yourself and paying yourself as an employee. Now, for some people who operate their businesses through a corporate entity like an LLC, or here in the UK, a LTD, a limited company, you may well be an employee and take part of your payment each month or each week through an employee payroll system. I'm not talking about that. That's a method for paying yourself correctly according to the tax laws. That's a method of actually getting the money from the business to you. Yes, you still need to do that, of course. Here I'm talking about, though, the essence rather than the law. So the legal side of how you draw money is one thing. This is something else. So let me talk you through it and you will see what I mean. When you take on an employee, whether you've actually done this in the past or not, one of the first things you'll think about when it comes to their salary is how much can I afford to pay this person? You want to pay them enough to keep them motivated in the position. They don't want to give too much away. You want to be generous, but not too generous. But it's also got to be based on affordability. What can your business support? What can it afford? What you need to do is include yourself here. Think about it in relation to you. You are an employee of the business, no matter what the legal standing was. We're ignoring that. So even if you're a sole trader and for tax purposes, you'll get taxed on profits. In this essence, you need to still be viewing yourself as an employee of the business. An employee, no matter who they are, needs a consistent salary. If you were to hire somebody, they would expect their salary every month or every week, how often, depending on how often you pay them, but they would expect to receive, and rightly so, their salary, that consistent salary, each and every pay period. So do you, and that's the key point. You do as well. So what can you afford to pay yourself right now, month in, month out in your business? And that is your current level of consistent salary. Now, yeah, I get it. When you're starting out as a small business, sometimes you can't afford to pay yourself what you would normally pay somebody external, and you have to just do the job and build your business. In that case, you still should be paying yourself. You are still working in this business. The business should still be able to afford to pay you something. So even if it's not the wage that you deserve or desire, that's irrelevant. To be paying yourself something, you can always build up to a more appropriate salary as the business can afford it. But you should be starting to pay yourself if you aren't already. So remember, when working this out, and I've touched upon this in the previous sessions, when you're working out how much the business can afford to pay you, factor in your expenses and your taxes, because you don't get to just keep 100% of the income coming into your business. It just does not belong to you. You do have expenses to pay, and the taxman wants their share as well. So in regard to expenses, set yourself a budget. Look at what you've been spending in your business so far. Look at then cutting out all the things that you no longer need as expenses. Make sure you're making use of everything that you're paying out. You can streamline your business down to the bare minimum, because that's what it should be if you're not getting your full salary. And you don't want to be wasting money anyway, because the lower your expenses can legitimately be, the more money is available for profit and paying yourself over and above that consistent salary. Then with regard to taxes, work out what tax bracket you're in so you know how much to be saving. In the US, you'll need to make sure that you're covering yourself for state and federal taxes where appropriate. And in the UK as well, if you're self-employed, you've got to make sure you're covering your income tax and national insurance. People often forget about the national insurance element. But if you're running your business through a corporate entity, then there will be corporation tax to pay instead. You need to work out what your tax bracket is. What taxes do you need to pay, and what is the percentage of tax that you need to pay? And you can do this by searching online, talking to your accountant if you have one, or bookkeeper, and just finding out this information. And then make sure that you are saving a percentage of tax each month or each week, however often that you work all this out. Some people do weekly money dates, others do it monthly. It's entirely up to you, but save a percentage of tax in a separate savings account. You don't want to get caught out owing the tax on money, because that's not financially healthy, and it's not good for your overall health as well. The stress of having to deal with the taxman when he comes calling if you haven't got the funds available. You should be ensuring that you can pay yourself, just like I said, just as you would for other employees. So when you're looking at the expenses, make sure you factor in an element for yourself as well, with whatever it is that the business can afford right now to provide you with a consistent salary. So for cash flow purposes, and I mentioned this in the last session when we were looking at evening out cash flow fluctuations, it needs to be something that can be consistent. So if you earn more in a month, you're going to put the money away and it can contribute to your salary, this payment from the business on months when things are a bit lean. So even if you are starting out and money is tight, pay yourself something. You need to get into the habit of making sure that you are compensated for the work that you do in your business. You own the business, but you are also working it. So you need to be compensated. You are compensated as the employee through this consistent salary. And as a business owner, you can take out when funds are available and you've got yourself a nice emergency buffer saved. You can then be taking out excess profits that are available, and you can take those out as a business owner. So get yourself set up to pay yourself as soon as possible. And yeah, like I said, it might not be as much as you'd like, but that does take a little time, but you start somewhere. But also remember this, when you have employees, you would always, and if you've ever been in a position where you have employees, even if you don't have them now, you realize as a business owner, you always want to make sure your employees are paid first. And you pay your employees before you pay your bills. So when I was a finance director and when I owned my own business, employees got paid on the 28th of the month and I paid the bills on the 30th. Employees came first, and making sure all that money left the bank account first. The thing is to remember is that you're in that list of employees. You want to be paid. You don't want to be supporting your business through your personal finances, because then things get messy. We're keeping things separate and dealing with the business as a business. So you don't want to be putting problems into your personal financing budget, into that arena. So we avoid that by giving yourself a salary that you can rely on. So how much you earn in a month work that out, deduct your salary, your taxes, and what's left is a profit buffer after you've paid your expenses. But for that profit buffer, and I'll talk about this more in the next session, that's where you're taking things away, putting money away so that you can be evening out your cash flows, but also any excess funds. So you can start building up an emergency fund buffer, and you can, anything in excess of that, you will be saving, and just allocate, before you do that excess saving, allocate money for your expenses for the next month. So if you have, and you can do this through budgeting or whatever way you're going to decide how much you want for your expenses. At the end of the month, you pay the employees, and you may be the only one. You put the money away that needs to be saving, and what you have left, you should hopefully then have enough left for the budget for your expenses. If you don't, you're going to need to look at trimming those expenses, and that's your budget for the coming months. Now, if you've got more money than what you need to have as that budget, that doesn't mean you give yourself more to spend on expenses. Only spend where you absolutely necessarily need to do so for the benefit of the business. Don't start to get frivolous with your spending. Just save that money. But you have the money in essence in advance. So very much like for your personal finances, you get paid at the end of the month, and then that money that you have is there for you to spend in the following month. We can do that with your expenses within your business. What money that you're going to put in the pot, and we'll talk about pots of money in the next session, you'll put the money away for the expenses, and that's the money that you can spend in the next month. Now, some of that money might come out automatically, but you might have some freedom in there for variable type expenses. And variable just means it's not something you're paying a month in, a month out. You've got some flexibility, and you can choose. Maybe you want to take advantages of some of these courses that are becoming available, some of these like $27, $37 packages that you see promoted on social media a lot. I'm seeing them a lot at the moment, but I also see a lot of people spending on those and buying them, not really using them because they're low value. And all of a sudden you've spent quite a bit of money that you weren't planning on spending. You still need to be aware of how much you're spending. So giving yourself a budget, making sure that you're only spending out the money that you have available is key here. So you're not spending too much. But again, if you've already paid yourself first, you're not dipping into your own pocket to fund the business, because that's what happens. A lot of the time people think they've got, they're spending on low amounts. They think, oh, it won't hurt to spend that amount of money, but then they do that several times and it soon adds up. Or they think they've got a lot more money in their account than what they really have, because they haven't factored in paying themselves. And then what happens is, when they pay themselves last, after all the expenses are being paid and everybody else is being paid, like the taxman and any other employees, then they then take what's left for them. Which means that when you're paying excess money out in expenses, in effect, it's coming out of your own pocket, because you end up paying yourself less, and you don't want to do that. You wouldn't do that for any other employee. You'd always make sure that they've got their money. So for a business to be financially healthy, all employees must be compensated. And don't go giving bonuses as soon as you have a good month. You wouldn't do that with employees anyway. Maybe a small bonus, but nothing substantial. Save it up and make sure that, if you've started an upward trend, and make sure you're going to continue in that trend and save up for 6 months. And just make sure things are not going to dip in business and you don't need those funds for another reason. And then if not, you can then share out the money. Typically that's just to yourself, but you can do that by saving within your business and just be taking out in the meantime your consistent salary amount. Don't forget the buffer of savings. You do really need that in case the worst happens, and we never know when that is going to happen. That's why it's called an emergency. Remember also that employees don't dip into the business cash flow. You wouldn't expect another employee to dip into the business cash when there's excess funds there, you shouldn't either. The typical employee as well doesn't take their personal expenses. They don't charge their personal expenses to the business account. You don't either. You shouldn't be doing that as well. You need to be thinking of your business as a business and you as an employee of that business. So that's where the mindset of taking on the mindset of the employee, the custodian of the business, really helps. So you stop putting your personal expenses through, you stop dipping into excuse me, you stop dipping into the business cash flow. The business is separate to you, and that is key to remember. So how you actually pay yourself this amount, well, that depends, as I hinted at the beginning, it depends on the legal form in which the business takes. You need to speak to your accountant if you're unsure about that. So for now, if you haven't started paying yourself yet in your business, work out yourself, give yourself a starting salary, work out what it is, and make sure that you start paying yourself that amount of money. So that's it from me today. In the next session, I'll talk to you through a simple money strategy that will allow you to put your emphasis on profit and put some of the things I've been talking about more into place. It just helps because it's an overall money strategy, and it is something that is quite simple to operate. It's not going to take much time, a little bit of time in setup, but then most things have, but it's not too onerous, and it's going to be really easy for you to then follow. So that's it from me. Until next time.